combined market capitalization is something which you referred to, sir. The BSE listed firms surpassed 400 lakh crores of rupees in April 2024. 10 years ago, it was only 76 lakh crores. Numbers speak for themselves. No need for a finance minister or anybody else to come and speak your glory to you. You are showing it to the world. This is the number. This is the way in which we have remained robust. The MSCI Emerging Market Index is also something which speaks for your performance. One of the most followed indices in the world. In 2013, placed us at 6.3%, whereas it is now more than doubled to 14.6%. MSCI Index, Emerging Market. There's also this concern, mostly of the opposition, because they're used to looking at savings and savings in the traditional instruments like post office or fixed deposit in the banks. India has prided itself about how it's a savings-driven economy. Today that savings is still happening, but it's not just happening in post offices and in fixed deposits. It's now showing up also in retail demat accounts. Because through technology and the way in which compliance for listed companies have happened in the last several decades, people are able to see it transparently about how board-driven processes have brought in efficiency and corporate governance has improved. People are willing to put money in the stock markets because they are better informed. And as a result, where in 2013, we had only 2 crore demat accounts, retail demat accounts. Today we have 15.1 crore demat accounts. And just in the last 1 year, 3.6 crore retail demat accounts have got added to this list. So, actually, there is such dynamic change happening in the way in which savings pool of families are no more just looking at post office savings or fixed deposit in banks or in some chit funds. They are actively coming into opening of demat accounts, believing in the performance of stock markets. That speaks volumes because Indian savings people becoming investors. You're talking about a very conservative, no harm in being conservative because it's their money, hard-earned money, but conservative savings mindset today looking at opportunities in the stock market, understanding the risk it involves because there is trust in the way in which markets have performed, and that is a reflection on your performance. I just want to highlight that even the mutual fund industry, which 10 years ago managed assets worth only 6 lakh crores, today stands proud managing assets worth 54.1 lakh crores. Just 10 years ago, 576% growth in mutual funds who manage assets. The mutual fund asset under management has doubled in the last 4 years. If I said 10 years, that's the growth. In the last 4 years, it's doubled. 580 companies have raised more than 3 lakh crores in IPOs. Would you believe this in India? IPOs are giving you 3 lakh within the country, 3 lakh crores, and 580 companies have managed to raise it. Unique mutual fund investors has grown from 1 crore in 2014 to about 4 crores today. Mutual fund investors. and average monthly mutual fund SIP contributions have grown 4.5 times in the last 7 years. Where was it in 2016-17? It was at 3,660 crores of rupees. And where is it today? 23-24. It is at 16,600 crores. Indian savings moving from fixed deposits to come into mutual funds and SIPs. Speaks volumes. Indian savings, small middle class families today realize that even if it is risk-laden, they are better informed and therefore they are willing to move to this area of investing in stocks and shares. Rates and InvITs. Rates and InvITs are two fantastic instruments which our financial world has created, and today sovereign funds are happy to come and invest in them because they see them as a very powerful instrument, transparent instrument through which they are able to invest and earn money. The growth which we've seen in the last 5 years, the combined NAV surging from last 10,000 crores where it was 5 years ago. Today it is 2.5 lakh crores. 10,000 crores to 2.5 lakh crores through REITs and InvITs. The bond markets, debt markets, have also come a long way. The corporate bond market size, that is outstanding amounts, growing by about 30% in the last 3 years. In the last 3 years. Where was it in September 2020? It was at 34 lakh crores. And where is it today? 45.5 lakh crores as of December 2023. So, that is in spite of some parts of the world seeing high inflation. And in India, although we kept it largely within the manageable, accommodative level, they still had speculations about what will happen because of inflation. But still, this one area has grown 30% in the last 3 years alone. So this persistent flow of domestic savings towards the stock market has actually played one very important role. They have become now the counterbalancing force when FPIs come and go. So there may not be actually any fluctuation despite the whimsical FPI movements. Indian owned savings which are coming from small retail investors is providing the shock absorber for you. I mean, what a drastic change in our investment financial market scenario. Can this be India? It is. Data shows. But that mindset that India's savings will have to be small savings in post offices and banks alone has not gone away from the minds of our opposition parties. But India has moved far away, moved far ahead, and moved fast forward. That's what I want to highlight here, is reflective of the market's performance, stock market's performance, and the trust that they have in today's market's governance structures. It's a very precious value. It's a precious trust which Indians have got in the stock markets. It's very, very precious for all of us to guard and build from strength to strength. The introduction of online KYC. Online KYC rules during the COVID time by SEBI was the trigger. From then started this flood. So the Indians were waiting. Look, I have money, I'm putting it at 3%, 2% or 5% at best. Is there no other way in which I can... COVID and the online KYC really opened the floodgates, if I can use that expression. Of course, now the JP Morgan and the Bloomberg are all going to be literally bringing funds into India. JP Morgan alone, that inclusion into the JP Morgan index alone is expected to bring at least 20 billion US dollars into India. Enormous potential. Just the BSE. I would appeal to this BSE that you should work closely with the SEBI in order to ensure stringent compliances and robust regulatory standards so that further investors' confidence grows. You are doing it. I take this opportunity to appeal because I have this captive audience in BSE itself. I appeal to you that you work closely with the SEBI. Any unchecked explosion in retail trading of futures and options can create future challenges, not just for the markets, for the investor sentiment, and also for household finances. Household finances have made a generational shift, which I just explained. We want to safeguard that. We want to ensure that that's not going to be shattered. We need to have both the BSE and NSE ensuring market stability, mitigating systemic risks, and making sure that the stock exchanges therefore will leverage technology and adopt blockchain and AI and have big data also to improve market efficiency and transparency and security. Fintech companies are coming up with a whole lot of instruments. We need to have trading more efficient and user-friendly. Adopting technology can help us in that. And I see that the BSE can play a proactive role in promoting high standards of corporate governance, even among listed companies. You can engage with them, talk to them, and make sure that the investor confidence is kept up. So even as the industry is moving towards adopting 4.0, Industrial Revolution 4.0, I think it is important for stock markets also to look at it. Many countries and big economies and big companies are all heavily investing in R&D. We need to have that kind of a approach for developing the software so required. I'd like to quote here the McKinsey Global Institute prediction that Finance 4.0, being a subset of Industrial Revolution 4.0, will help growing and emerging market economies by over 6%, contributing approximately 3.7 trillion US dollars. So by adopting fintech, financial revolution, technology revolution 4.0 as a subset of the industry revolution 4.0 will assuredly bring absolutely 3.7 trillion US dollars. You know by when? By 2025 itself. In less than 1 year. We just need to be ready to adopt technologies, blockchain, AI, deep data. Please make sure, big data. And I'm sure you're already on course for it, but I would like to highlight the need for it. And therefore, across sectors, banking, insurance, mortgage, forex, we need to have technology rapidly brought in. Most of these countries which have adopted are showing already clear signs of being encouraged by further investments and so on. So I won't take more of your time. Gift City is something which you've already spoken about. I understand there's also an interaction time. There's immense scope for financial markets in the growing years, in the years towards Vikshit Bharat. India can be the leaders for the world in creating the financial hub we need, whether it's a global hub, whether it's a fintech-based global hub that we're creating in Gift, whether the financial market headquarters for India, Mumbai,